is property investing for you right now in New Zealand? Now, a lot of people that follow and watch my content, they are beginners, they're a bit amateur on the level of investing. And right now with what's happening around the world, there's a huge question around maybe I should look at buying shares on the US stock market compared to property. CVs in Auckland are yet again going to be delayed. Now, a lot of people that came to my seminar, thanks for everyone that watched the build up to that, it went well, thanks for asking. A lot of people came and they were really confused on how they can value any property that they own right now, so they can go on and buy an investment property, start flipping or whatever. And one of the key metrics of value for an Aucklander right now is just what their house is worth and what the CV is going to be. Because everyone knows the CVs that were done in 2021, which was the peak of the market, right now is way more than what things are selling for. They were supposed to come out last year, then they were delayed to May this year, and now the new news have just come out today on April 9th that they might not even be out until July 1st. Now, this is very confusing for people that own homes. This is very confusing for people to plan their expenses on rates, and basically it just means that they don't know how to value their asset. So one of the main reasons how you can do that is obviously you can get an agent in to appraise your house for free. You can get 2 or 3 agents and get the average of the comparative market analysis that they're going to do. There'll also be people that can see the renovations you've physically done on the house, the landscaping, all the other things that a computer system cannot pick up. If you want to take a step further from that, you can also book in a registered valuer. This is very easily done by just searching that word on Google. There's probably 10 companies right there. You can look at their team and see the ones that specialize in your suburb of where you live. Those are the ones that you want. You do not want someone from West Auckland valuing your house in South Auckland, because they might value it way less. You also want to provide key documents and tools that can help get your valuation up, because you don't want your valuer to come in rushed, have no idea about the suburb or area, do a very conservative number to basically keep themselves safe. You can give them agents appraisals, you can give them invoices for work you've done on your property to help them actually value your property higher. So right now, if you wanted to use equity in your house, if it's an owner occupied, most people know you can borrow up to 80% of the value of your home. Going off CV, chances are your mortgage broker or your bank is not going to take that. They're going to look at their own online valuation, and if it comes in low, that's when you can provide that document to get more. Now, what happens when you actually can use the equity in your home? Most people's first thing, which is the buzz going around, because it took everyone 2 years of listening to all these property coaches content. This is one of the key things that I was talking about to people in my seminar. I've been preaching flipping for like 2 to 3 years, and only now has it started to become mainstream and popular in New Zealand. And to be honest, it is like the worst time that amateur beginner flippers can ever start. This is a buyer's market where by the time that you finish your flip and put it on the market, it'll probably still be a buyer's market, which means the price that you thought you were going to get for your flip, you might not achieve, which is where all your holding costs, your expenses, your renos, and then a lower sale price, you could end up losing money. So what this market actually is for is buy and holds. This is where you buy low, and again, I'll refer it back to the stock market. You buy low and you wait for the market to pick up. Now, when will the market pick up? Nobody really knows for sure, but if we're looking at all the stats and the data and the news articles, it could be anywhere for 2 to 3 years. And then we've got another humongous thing that is right in the middle of that period, and that is the New Zealand elections. This is where the government of Labour could get back in. They could rewind the interest deductibility, which will make a lot of investors pissed off, and they will have higher tax bills, meaning they might end up selling their rentals. A lot of people right now are looking at opportunities in the stock market for the blue chip stocks that they never would want to buy because they thought that they're buying it too high and they won't see a return. So you're talking about the magnificent 7 stocks: Tesla, Microsoft, Nvidia, Amazon, Apple. The key thing here is property at the end of the day is still a great thing in New Zealand because A, we have a housing shortage. It's something that everyone needs to have in New Zealand. New Zealand is still a great place for immigration, people to come here and live. Also, you can leverage equity out and literally pull cash out of the value that you've made from your property, your owner occupied. Even if you topped up 50 grand on your mortgage and you had that in cash in your bank account, you could then use that cash to go buy a car or go on a holiday, which is stupid stuff, or you could use that to invest it in the stock market, which could give you a better return than what that money cost you. Because right now, pulling 50 grand out of your mortgage might cost you around 5.5%. But if you were going to put it into, say, the stock market, and that grows at like 10% over the year, obviously you just made that difference in profit. But what most people do is they look at the stock market right now with $2,000 in their bank account, and they're going for the easy way, which is just to buy some stocks on Sharesies and then sit around and wait for that to turn into $1 million, which is never going to happen. And as we know, most people on earth is just looking for the easiest, laziest way to make money. And that is why for property, for them, it was just buy and sit and wait. But as I said all the time, that is not what you can do anymore. You cannot just buy a house for the average person and expect capital gains to go up. You have to buy it below market value in order to get that instant equity from day one. You do not have to wait 6 months to a year. You've made equity immediately. Then you do a little bit more improvements, some renos, maybe you paint the house yourself, you get your mates around and someone knows how to build a deck, and then you've made even more equity to pull out. Use your 30% deposit to go buy an investment property. Then maybe in 2 to 3 years, up to you, you could sell that investment property, maybe make 100 grand or hold it. Good amount of cash that you can actually go and turn into more money. Because the thing is, people need to realize that you need money to make money, but you have to quantify how much money you actually need. You need more than 5 grand or 10 grand to make money in this world, with inflation and everything that's working against that 10 grand that's sitting under your mattress. So again, property is still a #1 thing that I would look to do in New Zealand, but it shouldn't be the be all and end all. Sure, you can grow a portfolio, but anyone that has an entrepreneurial bone in their body should be looking at all other ventures of capitalization, becoming a capitalist, owning a business, investing in shares in the stock market, looking at opportunities when they pop up. To start off, property education is the key. I went through everything with people that was at the seminar in the Leaders platform. #1 thing was how to identify a good deal, how to make sure you're buying undervalue, how you're utilizing the software on your laptop that are free software that you're utilizing, Homes, OneRoof, TradeMe, and making smarter decisions. If you have no money to buy right now, it is very easy to go through the 4-hour deal sourcing course. You understand how to physically make sale and purchase agreement offers. You will know how to use certain clauses. You'll have financial people you can reach out to, accountants, lawyers, mortgage brokers. Give it maybe 3 months of actually making offers on properties. Chances are you could probably get your first one paid as a deal sourcer, or you could learn property trading or flipping. But again, in the InvestorPro Leaders platform, it's all on there for $295 for the year. So in a nutshell, we've seen things happen around the world right now. There's tariffs going on. There is blood in the streets, as they say. But if there are, you want to be the type of person one day that have a little bit more of a cash pile, which can be made from property, to eventually jump on it, especially for you younger viewers watching.